Good evening on Wednesday, 5:14 p.m. here in the farm fields of Valparaiso, Indiana. It is Wednesday, November 15th. Normally, I don't do videos this time of day, but I wanted to check in before it got too late and my account went under the all-time high, which it currently sits at 1.767. Previous high was 1.766, and it's taken a little bit of time to get back there. So I wanted to get that on the video, so not only for you, but for myself to timestamp it, because we, of course, are continuing to attempt to go higher and higher. Not that easy, though, is it? No, it isn't. But then I was thinking, well, I got some things to look at on here, and I've changed my mind on a couple of them. I wanted to get your thoughts. So Clorox, I'm going to let that go if it does indeed close above or at or above $75 on Friday. Clean Spark, $96 or 96% profit on those calls. Same with Canadian Solar. They're at 97%. Right here, these $16 calls on DFEN. I had a question. I had a question by Something Clever 1234. I haven't responded yet, but one of his thoughts was do a video to give us an idea of how you decide to sell puts or calls on stocks and which ones and why. So I'll definitely do a specific video on that, but I thought I would explain a little bit about my thoughts on DFEN when I first got into it. Let's take a look at the individual chart. So there it is, because my plan is to let it go on Friday, and I'll give you the reason why as I go. So on September 11th, I did sell 4 put contracts at a $17 strike, collected $124 for doing so. On October 20th, I rolled that, but I also rolled it down to $16. The 4 contracts collected $100. And then I was assigned. I was assigned on 10/23, which was early. I was assigned early because it's a monthly and it wasn't going to be due until Friday, November 17th. But on the 23rd, I was assigned those 400 shares at $16 for a total of $6,400 of an investment. But let's take a look. So on 10/23, and this will give you an idea of why I was assigned those shares. There is 10/23, okay, and DFEN was just over $15. So he pulled a fast one on me, and I bought $15 shares for $16, because one of my trading theories is to buy high and sell low. At least that was what was going to happen on this particular trade. So I did get assigned those shares when they were trading just over $15. I paid $16 for them. And the following day I said, okay, not so fast. See what's going on here? There it is. Computer acting a little slow. Not so fast. On October 24th, I sold 4 call contracts at what I paid. So the old school wheel method, $16, and I collected $360 for doing so, which if I let them go on the 17th, I'll be in the trade for 67 days. And in that time, I collected $584. So if you take $584 divided by the investment of $6,400, divided by the days in the trade, 67 days, and then annualize it by multiplying by 365, you end up with 49.7% annualized. Now, you're saying, well, that sounds great, that big number, 49.7, but you only made $584. Aha. Therein lies what I like about trading and collecting dividends, because it's $584 more than I had before the trade began happening. Now, from there, I want to show you, well, why wouldn't I just roll it again? Well, let's take a look. Let's take a look at the roll. And I'll explain in the best that I can, because, I'm still less than 1 year of experience into this. So I will be celebrating my 1-year anniversary on November 23rd. Happy anniversary. Happy anniversary. So if we were to roll this position right here, and it is a 30-day or a 1-month trade, because it is a monthly and not a weekly. Currently, DFEN is at 19.17. So if I would have just sat on my hands and did not sell calls, I would have made way more money, but that's the chance you take when you sell options. It's just how it is. You're going to cap your upside, and then hopefully in the meantime, you're going to make cash flow that's going to be reliable and dependable. So if we were to roll, we have to cover this debit because I really don't like to pay unless I'm buying to close at a nice profit or if I really have incredibly strong conviction. And on defend, I don't. I do and I don't, I should say. So the reason I got into the trade in the first place because I thought, hey, political tensions, we got the Middle East stuff going on. So an aerospace and defense ETF that is 3 times levered. Okay, so 3 times levered does what? Well, it increases volatility because you can see where the volatility is here on this options chain and see how high the volatility is on this particular ETF. So if we go to the $16, right, we would collect $80 in 30 days. So what is the math? Bum, 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 bring out the abacus. Okay, $80 divided by the 6,400, that would be in the trade, right? Divided by the 30 days, multiplied by 365, and it's 15.2%. Now, on a company like Pepsi or Coca-Cola or McDonald's or Johnson & Johnson or Walmart, I would be fine with 15.2% annualized in this type of trade. But in a 3 times leveraged ETF, I just don't need to risk it for the biscuit. So I'm going to lock in my gains if indeed Defend stays above $16 in the next 2 days, which they should. And then I will take home my 49.7% annualized return, which of course is only $584, but that does pay just about, well, yeah, it pays just about half of those KISS tickets I was telling you about. So that is one thought. The other is this. Go back to the big chart. Go back to the big board. What do you see here? What do you see? So we got Devon, 95% profit. So depending on what Devon does the next 2 days, we'll either sit on that and ride it through 100% profit or we'll roll it. Devon, they were down a little bit today. Let's see. They're just still hovering at numbers that I scratch my head, and it's from what I see with the voodoo charts, oil still could drop a little bit more before it then goes up, probably in a 5-wave rally. So that's when I'm going to be raking on all of my oil positions. That's the plan, and I'm sticking to it. Hyatt, 90% profit there. Jackson. Now, this is one that I ran the numbers and I did it to myself again. Ooh, I did it again. In my mind, this whole time, I thought I was into Jackson Financial for $40 a share. Wow. Let's take a look. Because you see this thing's underwater, $1,782. Now that's not actually $1,782. It just, if I wanted to buy these closed to prevent those shares from being yanked out from under me, then I'd have to pay approximately all those dollar bills to do so. So if we look at Jackson Financial, currently trading at $45.79. Hello. And my calls are at 40. So I am way under the water there on that. But again, I thought I paid $40 a share. Well, turns out old Dopey Bart has paid $41.64. 41.64. That's a big difference when you're talking about 600 shares. So if we go to the individual page for Jackson Financial, this is what we have. Let's move the big head, move it over here, just real quick, like, because I had already figured this up, right? And I figured up that, hey, through 11/17, between these, the buys and the calls and the puts and the dividends, we would be 267 days in the trade through Friday for $2,927. But that would be if I was selling them at what I thought I paid, which was $40. Well, that's not true. So if you take this math here, the 29,000, right? 24,984 divided by the 600 shares, there's our 41.64, right? So if I sold them at $40 a share times 600, I'd collect 24,000. Come on. So if we insert something right here, insert a nice row, and we'll do it below, and then we just throw in the old 11 17, and then we put a sign for the 600 shares, right? 600 at 40 equals $24,000, right? So that's a difference of opinion. That's a difference of $984. So we would have to put in the old minus 984, which would then take our total down to 1943, bringing the abacus back up, right? We've got 1943 profit. Okay, so we're still in profit, still green, all good, divided by what we purchased these for 24,984, 24,984 into the trade for 265 days multiplied by 365. So we'd still be over 10%, 10.6. And I was like, yeah, maybe I'll do that. 2 days ago, I was convinced of that. But if you've watched the channel long enough, you know that I'll flip flop whenever I want. Flip flop whenever I want. So I said, yeah, let me just take a look here. See, Jackson Financial, right? Dividends. One of my friends, I love to collect dividends. Wait a minute, right around the corner is ex-dividend date, 11/29. So is there any way to try to put together a diabolical plot to try to capture something, some more dollar bills? So I was looking at this. So if we go to Jackson Financial, let's see what my lady friend is saying. Broccoli almost done. She's making up some awesome Asian chicken peanut cashew sauce with broccoli. And my mouth's watering just thinking about it. So I got to wrap this up real quick. But if we look at rolling this position, right? So if we roll this position and if we attempted to try to just put some sort of diabolical dollar bill in our pocket, and we had to cover this. So at 80, or what does that say? $60. That's not going to do it, is it? So let's pull that off the table. Let's go out another month. Okay. And if we went to the $40, we would collect $270. We're getting close, but then I think I saw one more. It would be 121 days out, which sounds like a long time, but it's not when you're talking about collected $990. So not only would I collect $990 if I'm able to roll this tomorrow before somebody snatches those shares from me, I'll put the $990 in my pocket now, and the shares will still likely be pulled from my dead cold hands before this ex-dividend date of 11/29. So it could be only in 2 weeks those shares would be taken from me at $40 a piece, but I would also then have $990 extra dollars in my pocket. Now, if for some reason the stock was underperformed again, because it could easily do that at any time, right? And I was able to keep those shares, putting it out through the date of the March 15th locks me in two more. Or I shouldn't say two more. Yeah, two more. So it would lock me in this ex-dividend date, okay, which would be 62 cents times 600. So that is the quarterly share, quarterly dividend, $372. And then if we look at dividend history, don't know much about dividend history. So that's why I look at Seeking Alpha, you see. So we can check on when the next dividend, so if we look at 2022, their first dividend of the year, ex-dividend date was 3/11. This year was 3/13, so we're going to be at 3/15 on that call. It's still possible, just so it could be that we collect one more dividend on top of it, and it will likely be at a higher quarterly price. Because if you look at just their 2.5 years of track record, last year was 55 cents a quarter per share. This year was 62 cents a quarter per share. So they would probably be looking to raise that dividend again. So that's my thought on that. If I just get away with the $990 on rolling, then I'm going to be just fine. I would be more than fine. I would be ecstatic, because otherwise I'm just letting them go on Friday for no extra dollar bills. So the same will be true for the Palantir. I've decided to roll that as well, but we'll talk more about that later because I'm hungry and I got to go have dinner with my sweet baby doll, Sparkle Barbie. Thanks for tuning in. See you in the next video.